Let's dive right into this. So this is going to be an S&P 500 or ES futures case study, and we're going to be going over this very, very large sell-off. So when the market sells off, you can time these trades with a lot of precision if you simply understand what is going on. So when I trade, I only use a few concepts, right? I use liquidity, so I use Asian range liquidity, I use fair value gaps for my entry, and then of course I use order flow for confirmation. So let's just get into the video. So I always like to start my day by understanding where I am in terms of price. So market structure is very important. So if I just give you a quick snapshot of how I was looking at market structure, right? I had a structural high, I had a structural low, and then price broke structure, and I had a structural high. Now, what is important to understand is that I base my trading off the four pillar approach. The first of them is market structure. Now, market structure is important because you need to understand the overall direction of the market, right? So market structure can be seen as the market's vehicle. Now, once you have market structure down, the next thing you want to focus on is your dealing range. Dealing range is the most recent swing low up to the most recent swing high. So this is the dealing range principle that we're going to be focusing on, right? So you need to understand that this here is your dealing range, right? This kind of region here, I guess, is your dealing range. From this kind of red diagonal line represents the most recent low and the most recent high that we are currently trading in. Now, once you have that, you project the fib tool from that swing low up to that swing high, and you have what you call your premium and discount arrays. Now, once you have your premium and discount arrays, you then want to find your fair value gaps, right? And this leads on to POI selection. So this was Thursday, the 7th of August, and we're going to be going over a very, very large breakdown, very, very large sell-off case study you could have taken. So how this trade was taken, if I just kind of go to the if I just go to the Discord. So the Discord itself, if I just sorry go back to here, we're going to be breaking this down in terms of first the price action. So first we're going to be breaking down, we have a key level over here. This is a POI or a key level. So what makes a key level? So I am looking out for what we call 15-minute fair value gaps. 15-minute fair value gaps are the most important thing in my trading, right? I don't take anything more seriously than a 15-minute fair value gap. The power of using a 15-minute fair value gap is that trading becomes very simple. So the reason this trade was successful is a few different things, right? I'm trading from premium because we're above the 50% area, and I'm targeting the discount. Now, specifically, I'm targeting also the Asian range low, just like this. So the way we want to do this is we want to look for a break and retest on the 15-minute time frame, right? Or specifically the 1 minute time frame. So how was I doing this? So what we're doing is we are now waiting for market open, right? We want to understand how the market was opening. So, right, so we're just being patient and we're waiting for market open, right? So if we just head up to the 5 minute time frame, so I want traders to understand that every strategy you use must be simple, right? It's all about using a simple strategy. We can either break above, right? And we can then look for a trade kind of like this, or vice versa, we're looking for a break below, entry, and then we're looking to retest lower. So this particular trade was a retest lower. And the reason why I had a short bias going into the day is for a couple of reasons. First of all, we can see price has taken out the Asian range high and price hasn't taken out the Asian range low. That's one reason. The second reason is that if we look at the daily candle like this, right? This is the daily PO3 candle. I love to use this from ICT Concepts. We can see the daily opening price is actually all the way down here, right? So we're way above the daily opening price. So we want to be essentially selling when we're above the daily opening price. So when we're above the daily opening price, let's say it's here where my pen is, we want to be selling above. We want to be targeting the daily opening price. And that's kind of all you need with ICT concepts. You need to know power of three and you need to know fair value gaps. After that, everything comes down to essentially order flow, and you need to be patient to wait for market open. So understanding what's going on at key levels is the most important thing. So if I just head over to the Discord now, we're going to be going over $637 day, basically, right? So what was going on, was this. So let's go all the way back to the pre-market game plan. So this was my pre-market game plan, and I'm saying this to traders, right? As the market opens, I'm saying I am bearish as long as we stay below this level, right? I'm bearish if we stay below here, and I'm definitely bearish if we break below this level. So just for full transparency, this was given out at around, so this is going to be 14:19 UK, so that's going to be 20 past 2, right? So 10 minutes or 11 minutes before market open. Again, we're looking for a potential break and retest lower, targeting the fair value gap over here, the previous day key level. Okay, so this is how we do it. We are now going to be understanding the break and retest from this region, right? So how does a break and retest actually form? So a break and retest is very simple. Now we're looking at price action and we want to understand how the price action behaves in and around this key level. Specifically, we're looking for the highs and lows. So we want to see what was going on upon this area here. So we can see price try to really break above. This is now the 1 minute time frame. If we go to the 5 minute time frame, we can see a lot of wiki price action over here, and we can see price breaking to the downside, right? We see price breaking to the upside, and we see more importantly price breaking to the downside. So this is what we call step number one. So this here is the break. So let's label that as the break, right? So the break I'm going to label in black. This is your initial break. Now, you do not want to enter here. When you see price entering, you do not want to enter like this, and you don't want to be, trading off this area. This is not good enough, right? Because often what happens is that happens. You need to be patient to wait for the retest. So if you're someone who gets stopped out, it's often because you're not patient to wait for the move, right? There's two reasons for that. The first reason is you're FOMOing into positions because you don't know what you're doing. And the reason you don't know what you're doing is because you're not reading the interaction between the buyers and the sellers. And that's what we're going to be going over in this particular case study. And you can tie this in with ICT fair value gap. So we can see here price did leave a fair value gap. I'm just going to draw this over. So how do you know if a bearish fair value gap in blue is going to be respected? So you need to understand what was going on. Essentially, this candle over here. That candle that I've labeled in yellow was the market's essential key, right? That was the move that gave it away. So here's where we're going to be focusing on the actual execution, right? So this was my execution. So I went in initially with 6 contracts at around 64.3, I think it was 64.4, and we're going to be understanding the price action at this area. So I want traders to understand what was going on right at the top over there, right? 14 for 417, right? Even though the writing's a bit small. I want traders not to focus on the numbers, and I want them to focus specifically on the delta. So this video is going to be all about the delta. So what does the delta represent? The delta represents the difference between the right number and the left number. So we can see here we have positive delta because it's in blue, right? We see a lot of blue delta. That's positive delta, right? 14 times or by 417. So that means the delta is going to be significantly positive, right? The delta in this case is 403, right? 417 minus 14, 403. That is a very, very large positive delta. So when you come into a fair value gap, right, what is it you're looking for? Right? A lot of traders don't know, right? When you come into a fair value gap, right, what you're looking for specifically is this. You want to see the absorption of aggressive buyers, right? So I'm just going to write here AGG dot buyers. Now, when you see the absorption of aggressive buyers, right, that means that buyers are being exhausted in this region. I want every trader to understand. Buyers were being exhausted inside of this fair value gap. And by the way, if you're trading fair value gaps, you want to be looking for aggressive buyers to fail. And you see that via the delta. So if we go to the order flow footprint charts, and you look all the way at the top, you can see a very, very large positive delta. On top of that, I want traders to understand another thing. You see 0 for 86. Now, what does 0 for 86 actually represent? And so you see 0 for 86 right at the top. So I'm just going to write 0 for 86. Now, 0 for 86 is an interesting thing I want all the traders to understand, right? What does that mean from a logical perspective, right? So the bid is the left number. So 0 in this case, the bid represents the total number of aggressive sellers, right? Left number is aggressive sellers. The right number, the ask, represents the opposite, the aggressive buyers. And you can see this via the delta footprint charts, right? So if you're trading fair value gaps without delta footprint charts, or you're trading breakouts, support and resistance, liquidity concepts, supply and demand, you don't know if your liquidity sweeps or your breaker structure or whatever it is you're looking for, you don't know if it's going to hold if you haven't got data, real market data backing it up, right? Buyers and sellers tell you who is in control at the key levels. So we're just going to be focusing on these two, right? So specifically these two numbers over here. 0 for 86, right? There were 86 aggressive sellers, buyers, sorry, hitting the ask. Now, you want to ask yourself this simple question. You have a lot of buyers over here. So first you saw 0 for 86, and also just underneath you saw 14 for 417. Okay? Now, these two data points were essentially the retest playing out, right? So when you see a break and retest, all you're looking for as a trader is price to break, price to retest, and then price to break below this level. But you need to see what's going on here, or specifically just above the level. You need to know what's going on there. And what's going on there is essentially sellers being in control of the price, right? So sellers are in control of the price. So what happens here is you saw a very, very large amount of aggressive buyers followed by a massive flush down. So what that shows you is that on the 1 minute time frame, this fair value gap has been respected, right? This fair value gap here has been respected, right? Aggressive buyers have failed to break above the level. And we see that over here again, right? So we see price eventually heading down and we have a very, very solid break to the downside. So you don't want to be entering here, right? You want to be entering as close as you can to the level. And essentially you want to be waiting for a valid retest. Again, how does a valid retest work? Well, it works by using order flow footprint charts, right? You need to be understanding what's going on between the buyers and the sellers, right? So this is why the delta footprint charts are important. Now, what's important to understand is we can see the aggressive sellers stepping in after the aggressive buyers, right? But what's the difference between the aggressive sellers and the aggressive buyers? The aggressive sellers have been rewarded with follow through. So you're looking for delta and you're looking for follow through. Delta and follow through. Very important to understand. So you can see here the red delta is negative, right? Here the red delta is negative, 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 and these negative deltas break below the level, right? So using candlesticks alone are never going to give you the indication you need to actually become profitable, right? Neither is liquidity, neither is support and resistance, neither are trend lines, EMAs, RSIs, and the list goes on. If you can simply look at breaks of levels with order flow, you have a much higher strike rate. Now, with that being said, it's never going to be 100%, but it gives you an indication as to what's going on with price, right? So we can see here again, what's important is that you can see here 55 for 169, 27 for 211. Now, again, not focusing too much on the numbers, we're focusing on the delta. Who is being rewarded in this situation, right? You're seeing buyers not being rewarded. There were buyers sitting over here with the positive delta not being rewarded. There were buyers sitting over here that haven't been rewarded. Now, when you see all of the buyers not being rewarded, but the sellers are being rewarded, that tells you sellers are in control and you want to be selling, right? It's that simple. So a simple break and retest comes down to reading a couple of numbers, but more importantly, the delta at key levels. And so once you have your break and retest confirmed, you can enter over here with a stop loss above this level. So if I just go up to the 5 minute chart, it was a little bit clearer on the 5 minute. You want to keep your stop loss above the level, right? So now the question becomes, well, where do you target, right? So targets is an interesting topic. So this trade had what I call runway or breathing room to really run or sell off. Now, the reason I say that is because of a couple of things, right? First of all, let's zoom out on the 5 minute. On the 5 minute, we have our structural low down here and our structural high up here. This shows us that we are in a dealing range that's bullish, but we're in the premium. Ideally, we want to be selling into a discount. Now, the market obviously gravitates towards two areas, fair value gaps and liquidity. That's it. So if we go down all the way to the 5 minute chart, we can see price leaving a large kind of fair value gap over here. So this was a fair value gap price left, and so this would be our ultimate and final target, right? So this would be our final target all the way down here. Boom. Another reason price is likely to go lower is because price has not taken out that Asian range low. And for those who trade ICT, you'll know that once price takes out the Asian high, we are likely to target the Asian low. And that's exactly what happened. So if we go back down to the execution time frame or the 1 minute time frame, the reason we had such an aggressive sell-off is because the sellers were in control. So there's no actual ICT concept that you can rely on that gives you the indication that, that gives you the precision that you're looking for, right? So the reason the market again sells off, and I want every trader to walk away and know what was going on in this region as well. So there's two regions we've gone over today, right, in today's video. The first is that top region, the second region is this circled region, right? And we're going to be breaking down the order flow over here. So how does the order flow behave in this region? Let's go to the Discord. So on the Discord, again, I want traders to kind of break this down again. We had this green candle, which was super interesting, where half of the candle had negative delta and half of the candle had positive delta. So the candle itself was green, it closed green, but the green candle itself doesn't give you any indication. The reason the candle was green is because it was essentially part of that retest. It was part of the retest. And so we can see the entire top half of that candle being positive in terms of the delta. There were more aggressive buyers than there were aggressive sellers, hitting the right hand number, hitting the ask. But they're failing, right? And they've been failing throughout the entire level, right? We see them fail here, we see them fail here. Specifically, we're going to be picking up on the number 298 for 554, right? So let's try and put that down here. So we had 298 by 554, just as one number, right? You only need to focus on a few numbers where you see a delta outlier. So what do I mean by delta outlier? A delta outlier is where we have a large amount of, in this case, blue, a large amount of blue here, a large amount of blue, a large amount of blue. So, and also up here, a large amount of blue. So we're seeing a lot of buyers being aggressive, but those buyers were not rewarded with follow through. And we saw that here, we saw that here, and we definitely saw that here. So the order flow is the confirmation you need to validate all of your entries, right? So I want traders to move away from any kind of pattern, and you want to understand what's going on with the order flow. So again, buyers are aggressive, right? We see BA, buyers are aggressive. None of them were rewarded as we failed to break above the level. We broke below the level, so that means sellers are in control. You want to be selling, right? So I just wanted to make that case study for traders to understand, right? So this was a trade I caught on the 7th of August. We can see price eventually selling off all the way down to kind of the fair value gap down here, right? So 705 was the final TP. I banked about whatever it was, 630, 637. I took a loss earlier on the market. So I actually entered early, which is why I wanted to make the video. I entered early, got stopped out here, or exited my trade here, saw the absorption, which is important to understand. There was a massive absorption of those aggressive buyers. Then we had the initial final break and retest before price headed to the downside. Again, ICT, for the ICT traders, you'll know this is a PO3. This was the daily opening price here. We're selling above the daily opening price at a fair value gap with a break and retest confirmed with the order flow. And that is how profitable trading is done, right? So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.